Pada sidang akhbar hari ini, Bank Negara Malaysia akan menyampaikan taklimat mengenai prestasi pertumbuhan ekonomi negara pada suku pertama tahun 2018. Taklimat ini juga merangkumi perkembangan monetari dan kewangan di Malaysia, serta butiran mengenai inisiatif dasar Bank Negara Malaysia. Taklimat ini turut dihadiri oleh Wakil Ketua Perangkaan Malaysia. Jabatan Perangkaan Malaysia adalah agensi rasmi yang mengumpul dan menerbitkan statistik KDNK ataupun GDP negara. Ekonomi negara mencatatkan pertumbuhan yang kukuh sebanyak 5.4% pada suku pertama tahun 2018, dan pertumbuhan ini terus disokong oleh permintaan dalam negeri. Ladies and gentlemen, there are two key aspects that characterize the development of the first quarter of 2018. First, continued strength in global economic activity. Second, Malaysia's headline inflation continued to trend lower. The global economic expansion continued to be robust in the first quarter of 2018. In the advanced economies, private consumption continued to support growth, with further impetus from investment. Growth in the Asian region was supported by global demand amid continued resilience in the domestic activity. IMF continues to project a faster global economic expansion in 2018 at 3.9% compared to 3.8% recorded in 2017. Supported by global trade activity and domestic demand. The Malaysian economy expanded by 5.4% in the first quarter of 2018. Growth was driven by continued expansion in private sector expenditure and improvement in net exports. Domestic demand continued to be driven by private sector spending. Income and employment growth were supportive of household spending, while firms embarked on capacity expansion to meet demand. On the supply side, the services and manufacturing sector remain the key drivers of growth. The services sector was driven by higher growth in the finance and insurance services subsectors, while the manufacturing sector growth was anchored by export-oriented industries and construction-related cluster. Let's look at the detailed private consumption growth. During the quarter, private consumption expanded by 6.9%, supported by continued private sector wage growth. Wage growth in the private sector improved to 6.6%. In particular, services and manufacturing sector, wage growth expanded by 3.5% and 13.9% respectively in the first quarter of 2018. Going forward, private consumption is expected to be sustained by favorable labour market condition and continued support from the government measures. We remain concerned that the lower income segment of society face considerable challenges. Consumer sentiment remained poor, below the optimism threshold of 100%, as consumers continue to face cost of living pressures arising from food price increases. Wages of low and mid-skilled workers continue to remain low, below the national average, while the wages of low and mid-skilled Malaysian grew to 1,500 and 1,900 respectively in 2017. These wages are still much lower than the 4,500 monthly wage received by high-skilled Malaysian. So if you look at our 2017 annual report, there is a great detail in one of the box article on this particular subject matter. Private investment growth moderated, albeit at a more moderate pace of 0.5% against a high base registered in first quarter of 2017. and during that period, the growth was 12.9%. During the quarter, investment in machinery and equipment was weaker, in line with contraction in capital imports. However, this contraction is amplified by the exceptional growth of capital imports in the first quarter of last year. The growth in that particular segment was 42% last year, so it was very high. Growth was also weighed down by lower capital spending in both residential and commercial properties, mainly in the high-end residential and office space segment. This is a positive development given the imbalances in the property market, as highlighted by the bank during our last press conference. We have to note that private investment data is highly volatile, but medium-term investment prospects remain intact. Beyond the current uncertainty, there remains genuine reason for investment to continue. For example, to meet strong global demand and sustain domestic demand, businesses need to invest also remained, as reflected by the elevated capacity utilization rate of 80% in the first quarter of 2018. Let me touch a bit on the FDI. Malaysia was a large beneficiary of FDI inflows in first quarter of 2018, amounting to 12 billion ringgit. In the fourth quarter of 2017, that figure was 3.4 billion ringgit, which were channeled mainly into manufacturing sector. These flows reflect the successful formation of two joint ventures in the Rapid project in Pengerang, Johor, and the foreign direct investment in the E&E manufacturing subsector. FDI firms continue to record sizable profit, reflecting Malaysia's attractiveness as an investment destination. Of note, the mining and manufacturing sector are among the best performing industry for FDI, recording an average of 25.5% and 13.8% respectively between 2010 and 2017. Therefore, Malaysia is a very attractive investment destination for foreign investors. Let's look at the export numbers. The export sector, gross export continue to expand at above the 10-year average, registering growth of 5.8%. External demand was supported mainly by E&E products, particularly semiconductors, which grew robustly by 29.6%. Export growth was, however, weighed down by a contraction in commodities and slower expansion in non-E&E manufacturing export. Given that export growth in 2017 was the fastest in more than a decade, the moderation in first quarter of 2018 is well within expectation. Gross imports declined marginally by minus 0.8% due to lower intermediate imports in line with more moderate manufactured export growth. Capital imports also declined, reflecting the high base in first quarter of 2017, when capital imports grew by 42% due to the lower delivery of high-value capital imports. Going forward, Malaysia export outlook will be supported by sustained demand from key trading partners, continued expansion in the global technology cycle, and increased domestic production capacity. Leading export indicators such as global manufacturing PMI and business confidence indices across major trading partners also remain favorable. Downside risks arising from escalating trade tension are monitored very closely. What are the impact on current account surplus? The current account surplus increased to 15 billion ringgit in the first quarter of 2018. The fourth quarter of 2017, that number was 13.9 billion ringgit, or equivalent to 4.5% of GNI. Notably, this is the highest level of current account balance since second quarter of 2014, when it registered 15.3 billion ringgit surplus. Malaysia's current account is expected to remain in surplus as we move forward. as the goods surplus will continue to be supported by strong global demand and higher oil prices. Services and income deficit will remain a drag to the current account, given Malaysia's reliance on foreign service providers and labour. Moving on to inflation, headline inflation declined to 1.8% in the first quarter of 2018, reflecting a smaller contribution of domestic fuel prices. Although global oil prices was higher during the quarter, the degree of increase was lower than the previous quarter. The impact of higher global oil prices was also offset by the stronger ringgit exchange rate. For 2018, as a whole, headline inflation is projected to average within the range of 2 to 3%, given expectation of a smaller effect from global cost factors. Underlying inflation, as measured by core inflation, is also expected to remain moderate due to smaller cost pass-through to retail prices compared to 2017. On monetary policy, at the recent meeting in March and May, the MPC assessed that the degree of monetary accommodativeness was consistent with the policy stance to ensure that the Malaysian economy continues on a steady growth path amid lower inflation. The MPC will continue to closely monitor the evolving balance of risk to growth and inflation outlook. Key risks on the global horizon include trade and geopolitical tension, financial markets volatility, and uncertainty in the global oil price trajectory. With the firm growth and moderating inflation, it is also key for structural reform to continue in enhancing the quality of growth and jobs for Malaysia. On financing, private sector activity remained supported by sustained financing growth in first quarter of 2018. Outstanding corporate bonds continued to expand at double-digit growth rate due to infrastructure financing. Total outstanding loans grew at a steady pace of 3.9% in first quarter of 2018. This was supported by the sustained growth of loans to household and businesses. On the ringgit, after a strong performance in 2017, the ringgit continued to appreciate against the US dollar by 5.2% in the first quarter of 2018. The strength of the ringgit was driven by mainly non-resident inflows to the Malaysia's financial market amid continued improvement in investors' confidence in Malaysia's economic outlook. On the impact of the general election on the ringgit, despite initial volatility at market opening, the ringgit has since stabilized and has returned to the pre-election levels. This is a reflection of the market confidence on Malaysia's underlying economic strength. Going forward, however, ringgit volatility may return as global economic and financial market risks remain. These include a stronger US dollar given expectation of a faster pace of monetary policy normalization in the United States, adverse global geopolitical developments, and escalating trade tension between the US and their major trading partners. Let's look at some of the implications of the Financial Market Committee measures that was implemented more than a year ago. Onshore foreign currency volume continues to increase, while stable foreign exchange rates promote efficient price discovery. The impact of offshore rates to onshore has remained at levels below 50 basis points. Daily average offshore NDF volume is at around $700 million in April compared to an average of 1.2 billion in first quarter of 2018, and now represent a smaller proportion to the increasing onshore volume. The bank continues to assess the onshore market condition, especially external development that may lead to increased volatility or introduce new imbalances in the onshore financial market. Ringgit continues to be market determined, and the bank will continue to ensure orderly market conditions to support economic activities The Financial Market Committee will continue to evaluate market development and recommend initiatives to address emerging risks and to further develop the onshore market to meet the diverse demand of investors and corporations. Let's look at the component of the holders of Malaysian government bonds. As end of March 2018, non-resident holdings of Malaysian government bonds declined to 27.4% from 27.7% as at the end of 2017 due to increase in the bond market outstanding. However, in absolute amount, non-resident holdings increased by 1.8 billion to 184.8 billion ringgit. The lower non-resident investors' participation in the primary market is due to anticipation of the Fed hike in March and uncertainty following trade tension between US and China. The current level of non-resident holding shows that the stable investors' composition has increased in proportion to the short-term or speculative component, leading to lower market volatility and greater resilience. The changes in non-resident holding for the quarter were mainly attributed to the increase in asset managers and pension fund holdings and decrease in holding by banks. Asset management holdings stood at 42% of total non-resident holding. Pension fund holdings stood at 17%. Banks holding stood at 4.7%. Let's look at external asset numbers. Malaysia's external debt remained manageable. The observation is based on the nature and profile of our external debt. More than half of external debt is skewed towards medium to long-term tenure, suggesting limited rollover risk. More than one-third of external debt is denominated in ringgit and accounted by non-resident purchasing of ringgit-denominated instruments. Hence, they are not subjected to valuation changes from the fluctuation in the ringgit exchange rate. More than half of the foreign currency denominated debt is subjected to either prudent liquidity management practices, flexible terms, or backed by export earnings. Importantly, while there is no immediate threat from the level and composition of external debt, the bank will continue to monitor its trajectory to ensure that the sustainability as we move forward. What are the projections for 2018? While the growth of 5.4% recorded in first quarter of 2018 is slightly lower than the official range of 5.5 to 6%, Malaysia's GDP growth is expected to remain favorable going forward. The positive growth momentum will be driven by continued strength in both domestic and external demand. Trade performance is expected to benefit from favorable global demand, new export production capacity, and exposure to the global technology cycle. Domestically, favorable labour market conditions and ongoing capacity expansion by firms will lend support to growth in 2018. This is also corroborated by Department of Statistics Malaysia Composite Leading Indicator, which point towards continued expansion of the economy. However, there are possible external shocks that may affect Malaysia in 2018. These include harmful trade dispute, potential adverse market reaction to monetary policy shift in major economies, and a sudden escalation in geopolitical tension. Let's look at the domestic financial stability. Domestic financial stability was preserved in the first quarter of 2018. The financial system remained resilient. Domestic financial market continued to function in an orderly manner, and confidence in the financial system was sustained. The banking system and insurance industry remained well capitalized to meet unexpected shocks. At the end of March, excess capital buffers of financial institutions remain strong at 172 billion ringgit. The banking system continues to have sufficient liquidity to support the financing needs of the economy. At the end of the first quarter, the liquidity coverage ratio stood at 141%, well above the minimum transitional requirement of 90%. The loan-to-fund ratio, which takes into account the wider funding base of banks, stood at 82.4%. Following the 25 basis point hike in the overnight policy rate, the average cost of deposit and 3 months CLIBOR increased. In the financial market, conditions remain orderly. Overall financial market stress continued to trend higher, largely driven by development on the external front. Moving forward, risks associated with a potential escalation of trade dispute, uncertainty surrounding the US interest rate normalization path, and geopolitical tension in the Middle East will continue to weigh on investors' sentiment. Let's look at the household debt. Growth in household financial assets continued to outpace the expansion in household debt. Total household debt stood at 84% of GDP. Excluding lending by non-banks, the total banking sector loans to household as a share of GDP was 69.2%. Debt servicing capacity of household was sustained with financial assets remaining high at 2.1 times of debt. Impaired and delinquent loan ratios remain low at 1.6 and 1.2% respectively. On access to financing by economic agents. Access to home financing remained intact, including for first-time house buyers. Lending for this purpose grew at a sustained rate of 8.9% during the quarter. 35.4 billion ringgit worth of housing loans were approved to about 86,000 borrowers in the first quarter of 2018. 71% of these are to first-time house buyers for houses priced below 500,000 ringgit. Banks remain cautious in lending to the office space and shopping complexes segment in light of the oversupply situation. Lower loan approval rates for the construction and purchase of such properties were observed. The numbers are for first quarter of 2018, 62% and 71% respectively, and the average for 2012 to 2016, the numbers were 79% and 81% respectively. So you can see quite a decline in financing to those two sectors. Total business borrowing during the quarter was driven by increased fund-raising activities in the capital market, led by non-financial corporation, the infrastructure, utilities, and real estate sectors. Aggregate debt servicing capacity and liquidity position of corporates remains sound, with the overall businesses also reporting lower aggregate average. The medium interest coverage ratio of listed firm was sustained at 9.6 times to the fourth quarter, which is comfortably above the prudent threshold of 2 times. Impairment and delinquencies of business financing remain at low levels of 2.6 and 0.3%. Nevertheless, a marginal increase in impairment was observed among smaller firms in the real estate sector. Our effort to improve access to financing, especially to the SMEs, continues with the introduction of IMSME. IMSME was launched on 9 February 2018 as Malaysia's first online platform for SME financing. The platform allows SMEs to apply for financing from multiple banks simultaneously. It matches SMEs' profiles and suitable financing products from 15 financial institutions. SMEs with unmatched application would be referred to the financial advisory team for structured assistance to improve their eligibility for financing. To date, 236 applications have been successfully matched and 350 unmatched SMEs have been assisted through the financial advisory team. Let me highlight some of the insight of key economic issues and update on policy initiative by the bank. These include the potential escalation of trade dispute, the strength of the global slack, as a determinant of inflation in Asia-Pacific economies, and the recent initiative to improve the quality and transparency of financial services to consumers. The quarterly bulletin publication includes a detailed account on these issues and initiatives. In the first quarter of 2018, trade dispute between the US and China have resulted in announced plan for higher tariff for various imported products between the two countries. In its current form, the materialization of this proposed action by the US and China is estimated to have only relative marginal effect on global and regional growth. For Malaysia, the current proposed trade action are assessed to weigh on GDP by only 0.05 to 0.15 percentage point. However, the overall impact of this tension is subject to several key factors, such as the coverage of tariff products, exposure of countries to these products, and the timing of implementation. These are some of the variables. The downside risk should the trade dispute worsen and the potential negative spillover via the financial and sentiment channel warrant close monitoring, and will be continuously assessed. The second box article is on the global slack as a determinant of inflation. Over the past several decades, globalization has contributed towards changes in domestic inflation dynamics, with global factors playing an increasingly important role. Such global factors include global slack, which measures the extent to which economies utilize resources such as capital and labor at the global level. The box article in the quarterly bulletin presents our internal findings that global slack is an important factor for inflation in the Asia-Pacific economies. This can be due to greater globalization through stronger global competition and the division of production processes. The third is on improving quality and transparency of services to financial consumers. One of the articles in this quarterly bulletin is a detailed research on the quality and transparency of banking services to consumers. The bank believes that service quality is essential in reinforcing consumers' trust and confidence in the banking system. The article highlights the two key initiatives taken in 2017 to further elevate the quality of banking services. There are two initiatives. First, the publication of a customer service charter by each banking institution, setting out their commitment and service standards. The publication of the charter serves to empower consumers to demand expected service quality, while holding banks accountable to deliver the committed service standards. The second initiative is the conduct of a customer satisfaction index survey to assess customer experience and satisfaction with the banking services. The Malaysian banking sector scored an overall customer satisfaction index of 74.3% against the global benchmark of excellent customer satisfaction of 80%. So we have a lot of things to do. The publication of both the charter and the CSI scores is aimed at sustaining banks' continuous focus on improving service quality for the benefit of consumers. Feedback from the CSI survey suggests several areas for banking institutions' strategies to further elevate their service quality. This includes the need of banks to redefine the role profiles and requirements for staff in customer-facing roles to ensure greater emphasis is given to deliver superior customer experience. Ensure consistent standard across all customer touchpoints, supported by clearly defined and measurable service standards. The other is to give adequate attention to technology-focused solutions in delivering services to customers. And lastly, to streamline information and workflow processes to provide a seamless banking experience to customers. then it would not be complete if I do not touch on the role of the central bank under the current administration. My colleague and I reaffirm our commitment in carrying out our mandates as stipulated in the law. As enshrined in Central Bank of Malaysia Act 2009, we will continue to promote monetary and financial system stability and foster a sound and progressive financial sector. This will serve to provide a conducive environment for the sustainable growth of the Malaysian economy. As you can see from our past box article and analytical features, we have never shied away from highlighting critical issues and areas for reform. While policy changes will always entail trade-off, the current positive growth momentum and financial condition certainly provide us with a valuable window of opportunity to pursue with structural reform and address the underlying weaknesses of the economy. I will work with the relevant agencies and stakeholders, such as the Ministry of Finance and Council of Eminent Persons, is ongoing. We will continue to further assist them and remain steadfast in our collective focus to build a highly progressive, competitive and inclusive Malaysia. That is the end of my presentation.